We start off with the king of the jungle, Amazon, hitting an all-time high today after Morgan Stanley said it could be the next $1 trillion stock. Amazon shares now up more than 130,000% since its IPO back in '97, and sporting a cool $974 billion market cap. Get this, if you invested $1,000 when the company went public 21 years ago, you'd be more than $1 million richer today. Not bad for a company that started out selling only books. How much bigger can Amazon get, and is it the must-own stock of the market now? Guy.
Hi, Mel.
Hi, Guy.
Hi, Simba.
I love the that's the Lion King, right?
Yeah,
My
Simba.
favorite was
Simba.
the scar guy. He had a scar.
That's nice. He was the mean guy.
I really don't.
He was the antagonist of the show.
care.
Can you still own Amazon? Yeah, this is Amazon is one name we really haven't wavered on this desk. And one of the things I've said all along, it's not about really any of the standard numbers, EPS, revenue. By the way, they actually missed last quarter on revenue. To me, it's all about operating margins. And you go back last quarter, operating margins came in at like 5.5%. The street was looking for about half of that. Why do I bring that up? Because Morgan Stanley in their piece today cited exactly that they're getting the higher margin businesses, which is why they have a $2,500 price target. I don't think $1 billion is a finish line. $1 trillion is a finish line in terms of market cap. It's sort of a mile marker. We said that about Apple. I'll say the same about Amazon.
But is it must own? And we asked that in the sense that if you believe the markets are going to go higher, do you have to, in effect, be invested in Amazon? Do you have to believe in Amazon as well?
Well, you do at this point. I mean, it makes a huge part of the NASDAQ. It obviously is a big part of the S&P 500. I think it's important to remember this is a stock that's up 70% of the year. You know, so we're talking about 2,000. It's a nice round number here, but it's up 70% of the year. When you talk about that higher margin business, it's not the bulk of their expected $230 billion in sales. So to me, I think at some point, this wrecking ball, I think we spent a lot of time in 2017 calling Amazon a wrecking ball for retail, and it really had a tough time. Retail had a tough time, at least the stocks did, the way investors were perceiving it. At some point, it really is going to be a zero-sum game, in my opinion, for the rest of retailers.
Really?
Not just because the stocks have come back, you know, does it mean that they're back? I mean, at some point, think about all these major department stores. They're not growing sales anymore. And the ones that you really like the TJ and stuff like that, they're only growing at single digits. And Amazon is skipping its sales up 20, 30% a year.
Look at that chart of the XRT. That's a nice looking chart. I mean, it's close to highs here, Tim. I mean, are we maybe in a situation where retailers and Amazon can be happy together?
Sure you can. And if you look at the last year, Dan talked about how much Amazon has outperformed. If you own the triple Qs, XRT has outperformed triple Qs by 1,000 basis points. That's right, over the last year. And what is Amazon? Let's not get totally existential here, but is it a retail stock? Is it a tech stock? Is it a consumer staple stock? I mean, to me, the most aggressive moves that Amazon has made have really been into this $1.5 trillion consumer staples, consumable space where they're competing with Walmart, with Target, with Kroger, with a lot of mom and pop stores. And again, it's a low margin business. That to me is where the disruption lies. I think a lot of the rest of their business, there's plenty of room for competition, and I think other people are competing.
I view Amazon as a tech company, and the reason I say that is AWS. That's where the margins are, right? I mean, when we look at this company, when you look at the e-commerce side of it, it is not a margin business. You just talked about that as well. I think that there are groups out there that absolutely can compete. TJX has not been forced into a position yet to have to compete with Amazon at this point in time. They're building
Dan put you on the defensive, didn't he?
What's that?
Dan put you on the defensive a little
Well, when I think about TJX and all it does is go to higher highs every single week, I mean, it's not the e-commerce side of the business, though. That's something they're building on, but that's really not what TJX is all about. It's the fact that people are wanting to go there for those discounts, those treasures, as everybody.
Yeah.
It's the hunt, right? But the Targets of the world, the Walmarts of the world, I think have found a way now to compete and compete very well and win at the game of the online side of it and the bricks and mortar side, which Amazon really doesn't have. They've bought into it somewhat, but they don't have the bricks and mortar side, which is something they're going to build. But that's why I say it's a tech company, because it's a tech company all because of AWS.
But couldn't that be the next wave? Let's bring it back to retail for a second. Let's not forget Toys R Us, which employed 30,000 people here in America, just filed for bankruptcy. They're closing all their stores. It doesn't exist anymore. It went poof, right? And so maybe the Target, the Walmart, and the Amazon absorbed a lot of those kind of sales, and they were already nipping on the heels. I just worry that as Amazon goes with that barbell approach, this omni-channel approach, it's going to start having a really deep effect. Again, do we need Macy's? Do we need Nordstrom's? Do we need Dillard's?
Yes, we do. Of course we do.
Maybe we don't. I just don't know. You would have thought that especially a retailer like Toys R Us would have had a place in this world, wouldn't you?
The in-store experience has been proven to be necessary, whether you're in home improvement or whether you're in department stores. And the other thing I want to say is Toys R Us is out of business because Toys R Us was poorly run. Toys R Us did a terrible job transitioning acquisition.
Great.
They did a terrible job with inventory. They did a terrible job of understanding where the toy world was going, which was digital as well. So I think a lot of the retailers are better because they've gotten on their game. Look what Macy's has done with inventory, with their online presence, with their digital, with their in-store experience, where they've gotten lean and mean. And I think it's a harder place now for Amazon to just steal their business.
Here's a question, though. I mean, if retailers are actually putting up a pretty good fight, right, and it looks like, according to their stocks at least, they have been recently, does that mean that Amazon has a tougher time?
I think it may.
Does retail have to go down in order for Amazon to be up in some respects?
From the retail perspective, I think that's becoming a better fight. I don't know it makes necessarily Amazon a hard time, but it's a better fight. And because of that fight, they have to make AWS the real winner for them. And they are. But I'll bring up Microsoft. Why? Because they're in the cloud. They compete. They've actually been slowly getting some market share away from Amazon. And oh, by the way, you bring up Toys R Us to talk about gaming. That's another aspect of Microsoft as well that gets forgotten. But the amount of money they make on the gaming side as well.
Wait a minute. This sounds like you're would you rathering yourself.
Oh, I
would you rather?
We know about Pete and
I would rather
Amazon or Microsoft, and you'd rather Microsoft.
I own Microsoft, and here's why. The one difference I'll say real quick, and then Guy, I want you to get in there. But Amazon right now, I look at the PE, even with the AWS, everything else. You know what? It's really difficult to say, you know what, I can buy this and feel comfortable going to bed at night, because I don't think you can. It's been a great buy for all those who've jumped in. But I'll tell you what, when you look at the PE right now and you look over at Microsoft and it's trading at a fifth of what the PE is for Amazon, it's pretty unbelievable.
I'll play the game. I mean, I'm probably right with Pete on the Microsoft front, but I'll say this real quick. Maybe Amazon over the last 5 years has forced these operators, these other retailers, to get better. And you point to Target's a great example, and we've talked about Target now for a while. Ever since their breach of security, I think that's 4 or 5 years ago, if you recall, that stock has actually been on fire, and it's probably trading around all-time highs. And valuation-wise, we talked about it last night. If you like Walmart where it's trading, you got to like Target where it's trading. So I would push back and say maybe Amazon has raised the game of a lot of these
You
retailers.
can like both is the bottom line.
I think so, and it's proven to be true.
Well, my would you rather, first of all, is just
I love this would you rather around the horn.
Would I rather
whatever
talk
you
about
want.
a data center as being a tech company, or I'd rather talk about really what's helping the consumer? I'd rather point out that I don't think that data center, I think it's a very commoditized, competitive business that at some point I think margins are going to go down rapidly. I think the best thing that's going on for Target and the retailers is that the consumer truly never has been better. We've been talking about this for a long time. People are happy in their jobs. We have these record job kind of popularity reference points. We have certainly higher wages. We certainly have 3.8% unemployment rate. That, to me, is why the consumer and the consumer discretionary plays, and even Amazon, are kicking it.
I'm going to ask an open-ended question. None of this would you rather, two choices. Open-ended. I'm going to pose it to you, Dan. So be on your toes.
Buckle up.
What is the must-own stock of the market? We're asking if Amazon is the must-own stock. What is, in your view, the must-own stock?
Tough question.
We didn't rehearse this one.
No, we didn't.
Tough question.
Like we rehearsed it.
This
Not
is
a yes or no
hard one.
answer,
I gave
pal.
it to
It's
Dan
not
because I have
multiple
full
choice.
faith in him.
I don't know. I mean, listen, I think I just brought it out a little bit. So we're talking about Amazon a year ago was really struggling with getting through 1,000, and now here we're talking about it at 2,000. And I think that's been a big part of this market story over the last year. So I'll just make this point, and I've made this point a couple times, that if we got through after the 6-7 month consolidation in the market, there's a chance that we go straight up. That's happening right now. And so, to me, I don't think you want to bet on the horses that got you here. You guys have all done a great job on this, talking about these different rotations. You know, I've been pointing out, oh, well, the semiconductors haven't participated. Some of these cyclical things haven't, and they're starting to a little bit right now. So I think if you get confirmation by semis new highs, bank new highs, that sort of thing, the S&P is going to go to a lot of these guys' targets that are 3,100, and I'm not certain betting on Amazon at 2,000 up 100% in a year is the way to get there.